presentable.
Hi, everybody. This is Josh Mancy with the Corn Belt Newsletter Podcast. I'm super excited today to have the one and only Jonathan Coppess as our guest today. Jonathan, thanks for being on the podcast today.
Thanks, Josh. That one and only thing is probably the nicest thing anybody can say about me.
Well, I've always got to do this. You know, I did this when you were out in Iowa with us, but I'm going to plug the book. You can tell how important it is because I'm even putting it over my logo here. Fault Lines Foreign Policy. Thank you for what you did with writing this, the history of the Farm Bill and what it's done for those of us that really care about farm policy in general and the kind of the roadmap that showed us.
Thanks. I thank you for the compliment about the book and for obviously the shameless plug of it. It was a labor of curiosity and torture, and I'm glad it has some resonance. I'm glad it lands with people. Good to see you again. Thanks again for having me on. Do I need to introduce myself officially?
Yes, absolutely. Go ahead and introduce yourself for those who don't know who you are.
For those lucky enough to have not had to deal with me in any way, shape, or form, I'm Jonathan Coppess. I am an associate professor of agriculture, the Gardner Associate Professor of Agricultural Policy at the University of Illinois, where I work obviously on the Farm Bill and farm policy. Do a lot of work with the Farm Doc Project and the Farm Doc Daily articles and so forth. So I am a recovering attorney. I'm a recovering swamp creature. I spent 8 years in DC, and many, many, many years ago, I grew up in Western Ohio on my family's farm. So that's sort of my rough background, and also where a lot of questions come from along the way. So thanks for having me on, man.
You bet. Let's kind of how this is going to go today. Jonathan, why don't you pull up your slides? Jonathan did a presentation out in Iowa here in December, kind of where we're at here within agriculture.
Yeah, you're gonna get, so we're really gonna get me in trouble for all the stuff I have to say. I mean, as we talk about in Iowa, and I maybe just kick this off, particularly since we're both kind of history nerds here, is this understanding of where the Farm Bill, as we have long known it, at least for the last 50 years, as I both tongue in cheek, but in some seriousness, that Farm Bill's dead. Like that we kind of have to come to grips that what we have been used to in terms of how this whole thing works for the last 50 plus years was ended back in July of 25 when the One Big Beautiful Bill Act, the big reconciliation legislation, included a massive cut to the Supplemental Nutrition Assistance Program, SNAP, used to be called food stamps, and it doubled payments to farmers through the ARC and PLC program. And so we've always sort of what you learn when you're on the Hill and is repeated over and over is what they call the cardinal rule of Farm Bill politics, right? You don't take from food assistance and pay up farm assistance. That was always the, don't even think about it question or comment, and that's exactly what this reconciliation bill did. So oftentimes when I talk about it, the Farm Bill's dead, the policy's still there, right? The ARC and PLC program continue through 2031. Crop insurance is a permanent program. So I'm not saying that these things, you're going to wake up tomorrow and all those payments go away. But what matters is that we ended that coalition. And so one of the things we always think about that cardinal rule is, in order to get stuff done in Congress, right, you got to have enough votes to clear the House and the Senate. And so oftentimes that requires building a coalition of interest or coordinating across various interests. And so the Farm Bill since 73 has had this farm support system combined with the food support system. So then food stamps, now SNAP. Back then it was target prices and deficiency payments, and now it's ARC and PLC is basically the same program as 1973, just much higher trigger points. But anyway, once you break that coalition, you don't have a Farm Bill, right? You may have individual programs, you may have individual bills or whatnot, but you don't have the Farm Bill in that sense. So that's largely what I'm talking about when I say it's dead. And then I also noted in here, we've had this kind of series of near misses or really damaging aspects. And all of them are the same thing. Well, two of the three are the same thing. In 2013, fighting over the SNAP program in the House was the first time the Farm Bill lost a vote on the House floor since 1962, which is a key date. And then 2018 is the second straight loss initially on the House floor. Again, a fight over SNAP kind of breaks apart that coalition. And we've never had a history in 90 years of doing this, all the way back to 1933 in the first one, in the Agricultural Adjustment Act. You don't see two straight defeats. So that was a big one. Now you throw in the reconciliation bill that cuts SNAP, doubles the payments. But the other thing that I don't think we talk enough about, and we may get lost in this on a tangent if we're not careful, but that I'm becoming increasingly concerned about in the policy realm is this ad hoc assistance. All these payments, so we authorize a farm bill, it's 5 years of program payments. But what we've seen since 2018 is this ad hoc. And I was saying out there, and I've said it, like this almost maximum absurdity. I mean, just think of, if you need something to hold on to, just think of this $12 billion bridge payment, the Farmer Bridge Assistance Program. And the justification for this assistance is it's got to bridge from the 10 billion last year to the 15 billion projected to be paid out this fall. So we're now making payments to bridge between payments. And if you can't, if that doesn't tell you the policy is broken and we have problems, I don't really know what would, because it clearly, so many things are not working. But when we add this into the mix, what we're seeing is this massive shift into money going out this way, all the way back to 2018 and the first Trump administration's market facilitation program, which, by the way, like the bridge assistance, wasn't even appropriated by Congress. Like, they just made up a program. When you start doing that, it throws off the whole politics, right? The whole expectation game. I mean, you know, your lobbyists go create a program rather than have to fight through Congress and get something built in that way, in which you have to justify it. You just roll out a new program. So we come up with a Farmer Bridge program. And then what really concerns me is that all of this money is not fixing the problems farmers are facing. So lower prices, the squeeze with high cost, really high cost. All these payments are doing is making it worse, right? And I think you can use different analogies, like some say use Band-Aid. I actually think the better analogy, and not a good analogy, is painkiller, right? We have a problem. Farmers are struggling with high costs and these lower prices. We've watched this administration decimate trade markets. We've watched Brazil kind of take over soybean export markets to China in particular since 2018. And none of these payments fix that, but they do sort of dull the pain of the problem, but that problem persists and gets worse. And so not only does this sort of help bring down the farm bill as we've known it, I think it's also really dangerous for farmers. I think it's going to keep costs high. I think it's going to keep land rents high. And you end up squeezing out a lot of farmers at that early stage. And this is something I don't think we talk about enough. All these payments really, I mean, you get some groups really talk about how these go to big corporate farms or they go to large farms. That's true, in the sense that the more acres you have, the more payments you get and so forth. But I think what we're missing is how farmers that have been in farming for decades have a lot of this sort of built up. And so they're benefiting even more. And the ones that really get hit are in those early stages. And I am very concerned for anybody who started farming since the RFS came into place in 2005. So anybody in the last 20 years, you have not seen, you know, the stuff that goes back into that late 90s or even back into the 80s. And so a lot of I don't know what that adjustment looks like. But what we do know is all these payments are going to keep farmers from adjusting until it's too late.
Yeah, renewable fuel standard for those that are not.
Yeah, sorry, I got to stop.
You're good. You're good.
Yeah. So anyway, that's sort of a long rant at the beginning. I don't know where you want to go or how you want to pivot from there.
Well, Jonathan, to your point, emergency commodity assistance program that was at the end of 24. We did have with the Tax Act in 2025, ARC and PLC updated within that. So what I'm hearing you say at the moment is an actual 5-year updated farm bill the way we're used to.
Done.
You're saying that's over with.
Yeah, yeah.
That's why we're hearing. That's why we're hearing something called a quote unquote skinny farm bill. You want to elaborate a little?
Yeah. And the House appears to be going to release text and try to do a markup of this. Skinny farm bill is a nice way to put it. It's sort of all the things they didn't do, right? It was like, so they did this, right? You cut SNAP, $200 billion out of the food assistance program, which by the way is probably an undercount when you consider how a lot of the changes make it harder to get benefits. And so it's just going to drive people away from the program. Again, a good example, that doesn't mean they're not going to be hungry. Doesn't mean that, their job isn't paying them enough to put food on the table. It just means they can't get the benefit, right? Not exactly winning policy. So yeah, there's a whole, Farm Bill usually has about 12 titles. It covers everything like rural economic development, ag and food research programs. All that just got tossed aside because they wanted to do this thing. So the idea that you're doing a skinny Farm Bill, again, fascinating naming, kind of like Farmer Bridge Assistance, like,
Right.
oh, we all want to be skinny. Like, what are you really saying here? What they're really saying is they didn't do a Farm Bill. They killed the Farm Bill as it operated. And they didn't do a whole bunch of this stuff like helping rural communities, like helping ag research, because they were too busy doing this reconciliation stunt. And so now they're going to pick that up. And I don't know how much of this is like really working on the policy and how much of it is, oh, we have a midterm election coming up and we don't want to have to hear about a Farm Bill between now and November. I don't know. It's just frustrating to see it. And I see it as a bit of an admission that we didn't do the full job back in last year.
Well, we had kept kicking the can down the road, right? We had all the listening sessions in 2023 and expectations of getting a 5-year farm bill, which I guess I've been talking about a little bit as of late. I guess what we're kind of looking for in the countryside is just a little bit of stability, right? And having some certainty out there, which in an industry like ours is, we don't have much certainty, right? Mother Nature determines so much and world markets determine so much. And so like anywhere we can get a little bit of certainty is really nice. So like I call you Mr. Farm Bill because you just, it. And for you to say that, that coalition that was instrumental in having that 5-year farm bill is done with. Now that puts, I kind of back on my heels a little bit going, okay, well then where does that leave us, Jonathan?
Yeah. No, and to your point, like, this is how dumb I am, right? Like if I'm Mr. Farm Bill, am I trying to get myself out of a job here? But it is, so this is the one thing. So I'll make 2 points on that because it is the right question and it's a difficult question. And saying the Farm Bill is dead, like the value isn't, to dance on his grave or to make some, hyperbolic statement. The idea is exactly that. If this coalition is done, how do we think about this stuff going forward? And what does it begin to look like? And so these questions are the questions, right? So we could stop playing games and pretending there's a Farm Bill. We just get down to business and talk about, okay, we've got to deal with some stuff. And so I think that's key. I would say that there is reason for optimism because I think we've also seen farm policy get a lot worse under this arrangement because, not to get too nerdy, but basically because of the way the budget stuff works and everything, like it's real easy to tuck benefits that are small in the aggregate, like the baseline number. So you can pay $300 a base acre for rice base, but it doesn't show up in the baseline the same way. And it all hides behind SNAP. And so you've seen SNAP, in particularly the last 2 Farm Bill go around, be this sort of hostage, which is used at the end of the day. We look back and say, how much money are we spending on that crop and why? Oh, by the way, you don't have to plant that crop because it's on base acres, which is another mess that's I've been knocking my head against. So I think there's a potential silver lining here in that if it forces us to do this differently, that means we have to justify what we're doing differently. That means we don't hide behind the SNAP fight And now we have to look at farm programs and farm policy standing on its own two legs. Will that help us get a better policy? Because your other point, farmers have enough uncertainty on every growing season and every marketing effort. You don't really need uncertainty in policy, right? Like that, you don't need to add that layer of uncertainty. And now we're seeing everything from tariffs to these payments. It's like, what's next? So I do think there could be positives if we have to justify and design policy kind of in the open without that cover of SNAP.
Well, to your point, like not only did we have ECAP, and then you had the Supplemental Disaster Relief Program, stage 1 and stage 2. Now we've got Farmer Bridge Assistance, and now I'm hearing there's another program, $17 billion. And you know, to your point, and we'll let you continue on with the presentation here because I think you're going to hit on some of that. Like if this is like you said, it's not. Yeah, Band-Aid, I think, like you said, is maybe a very nice way of putting it. Like, but there's something glaringly not right here if this is where we're at. So like, yeah.
And there's a lot of challenges to it. And so what the next okay, we'll deal with, you got to keep me on track. I'm like I'm wandering off into
no, you got a couple of
tangents.
Guys me in this is the fun part.
So one of the things that so we've got the Farm Bill, Reconciliation Farm Bill kills the Farm Bill Coalition and sort of leaves us in this uncertain kind of state going forward. We've got the policies around. So then the next question kind of is, well, did it do anything good? And when we just look at farm policy, let's set aside the cuts of the food assistance program and look about where we're headed in farm policy. So I have my top 5 that we talked about in Iowa and I've written about on Farm Doc Daily. It's sort of like the top 5 really bad changes to policy. And when you look at them in total, it's sort of like the direction that we're headed, again, raises massive concerns just in what was reauthorized, not counting all the ad hoc assistance and other stuff going on. So then when we were talking about it, so I walked through my top 5, and I'll do this real quick so we don't spend a lot of time on the details. Number 5 is that we increase the premium subsidy. So crop insurance, farmers pay a portion of the premium cost. The federal taxpayer covers about 60% on average over everything. And we have these, rate schedules of how much, the percentage that the federal government pays in subsidy. And so what they did was they increased all areas of that for buy-up coverage of crop insurance, but they increased the lowest buy-up levels more, which there was already a skew towards the lower coverage levels. Now it's even skewed a bit more. This isn't major. It's kind of it's sort of like, why are we doing this? Why are we basically encouraging or over-subsidizing lower coverage levels? Because typically you're buying lower levels of coverage where you have higher risk, right? Any insurance, right? It's like you got a teenage driver, right? That car insurance is going to cost more. Maybe you buy a beater and you put liability on it. You don't have like the really nice insurance plan. So that's number 1. I think probably the ugliest provision for crop insurance. Well, I don't know. This one's tough between this and SCO, but this one's a dead giveaway. We know something's amiss when you see a provision like this. So my number 4 in the top 5, not only do we subsidize the farmer's purchase of crop insurance, there's also something called administrative and operating cost subsidy that go directly to the insurance companies. So this isn't to the farmer, this is to the big insurance companies. And it's a subsidy to cover some of the costs of delivering, right? So private insurance companies deliver the policies with the federal backing and subsidy. So it's a public-private partnership, if you will. Partnership might be a very nice term for it. But we subsidize the companies in delivery. Tucked in this bill is this provision that I had to read this 3 times to be like, wait, is that really what that says? So what they did is they are giving an additional A&O subsidy that's worth as much as 6% of the book value of the premium sold of what the insurance company sells. An additional subsidy only if you sell in states with high loss ratios. That's a 1.2 or 120% or higher. Now, what is that? This one is a confusing and obscure. You're sort of even trying to explain it. You feel like you're you're speaking in a, authentic frontier gibberish or something. But the bottom line is we're paying insurance companies to keep selling insurance policies where the losses are so high that they don't want to. And this points to some stories we saw out of West Texas where like irrigated cotton can't survive the center pivot coming around. And so you have massive losses, and the insurance companies have to carry some of that loss. Some of it they shift to the federal taxpayer, but they have to carry some of it. And so this is in effect encouraging them maybe might be the nice word of it, or pick your other favorite term, to go out and keep selling where the otherwise business sense would say you're not selling insurance policies there. This is a dead giveaway that we're shifting the crop insurance more and more into this over-insurance of high-risk areas and overly benefiting loss crops in areas that have too much loss. So that was number 4 on my list. Number 3 on my list then is one of my I actually can credit the target price or reference price policy for that damn book, because that whole book started when I was working in the Senate and we were fighting with the House over fixing a price. And I just kept going, where did this start? Why do we put a price in a statute? So we all know prices are volatile. We all know that things change. Who thought it was a great idea that we would write legislation, pick the price, and lock it into the statute for 5 years? So that is actually the origin story of that damn book, because I was like, somewhere this had to happen. That was 1973, by the way, although it goes all the way back to the old parody fights. But anyway, this is the big spender, right? This is where most of the money that we cut SNAP for goes into. And that is a massive increase in the reference prices. These are crop by crop based, but they're paid on base acres and not planted acres. So I can get a massive rice payment and plant it to corn, which is what I think we're going to see a lot of. And I'm worried that we're headed towards an overproduction cliff in corn because of the seed cotton reference price and the rice price, where their markets are tanked. It doesn't make sense to plant cotton. So you're going to plant corn on cotton base and you're going to get $130 an acre to do it or more. That's a whole problem. These things have been out of balance at least since 2002. I would argue they were out of balance in the 80s too. But really since 2002, we have favored these southern crop base acres, not crops, base acres. And we're seeing massive payments. These are like averaged nationally. So some places will get over $300 an acre on this, a base acre. And Jonathan, they raised,
You want to real quick just talk, I mean, this is talking ARC and PLC, that is like speaking a foreign language. You want to just for folks to just real quick talk about base acres and how that works and what the
Josh,
you possibly can.
Oh God, I don't know if I want to do this to you or anybody that's still listening at this point.
I think it's an important point though, because you're like, well, you're getting base acres, but you're planting something else. And like, how does that work?
All right. So real quick, and I've been trying to sort this out too on Farm Doc to like think through this, right? Back in 1996, the Revolutionary Farm Bill of 1996, Freedom to Farm or whatever, the FAIR Act. What they did at that point in time was lock in the acres and decouple the payment from planting decisions. And so the idea was if you get a big payment and it depends on which acres you plant, you're going to think as a farmer, you're going to think, okay, how much that payment might be, and then I might plant or not plant that crop. So it's going to interfere with your planting decisions. And so the idea in 96 was, particularly with all the free trade stuff going on, let farmers have the flexibility to plant which crop they want, and they don't have to look to their payment, right? I think then Chairman of the House Ag Committee, Pat Roberts, who's one of the greats of ag policy, would talk about, don't stop and check the mailbox before you get on the tractor kind of thing, right? So what we did was to avoid that influence of policy on how people farm or what decisions they make in the field, we decouple it. So if you have this history of corn-based acres, you get corn payments even if you don't plant corn on those acres. And so it was like we fixed one problem, but I think we've created another one because we have these off-balance payments, so you can now get a big payment, plant a different crop. And so that is carried through since 96. Think of all that's changed since 1996. Like a lot of these acres go back into the 80s. It's the historic planting records, but we locked that in place. So the idea was that doesn't change. and farmers plant what they want. But because we make payments by crop, which is an unfortunate design in the policy, I think, it means that giving farmers that flexibility is I can plant soybeans on seed cotton base and get a big payment, which subsidizes my soybeans and compete with everybody else. And so your soybean base acres are worth $22. You know, on average, I get $22 on a soybean base to plant soybeans, or I can go plant a seed cotton base to it and get $130, right? That's the problem we're seeing with this. And that's the base acre system. It fixed one problem to create others. And it may have, I think what we're seeing right now or may see this year is going to expose that this is a really problematic policy design, not in its own self, but when you tie it to these type of payments. And so we walked through some of that, you know, looking at where the highest payment rates are. The other thing about these base acres is you don't have rice, peanuts, or cotton base outside of southern areas. Right, so rice is pretty much only grown along the Mississippi River, Arkansas, Mississippi, some parts of Texas, and so forth. But you know, those base acres aren't available in Iowa or Illinois. We got corn and soybean base, a little bit of wheat base, and so that's one of the things we go through. Is every time we see these payments, we're not talking about corn acres. We may, you know, we're not. That's not what you planted. So that's the PLC mess that we're seeing. And I walk through, you know, just our projections right now of how high these payments might be. And by the way, our projections of this topped out at 13 billion, and the Congressional Budget Office most recent projections is nearing 16 billion. So these rates are now low compared to where we're headed.
Interesting.
Yeah. And so that's that kind of stretch. Did I make sure I did that right? Did I get you the base acre?
That was beautifully said, because that is a very, trying to explain that is it's very complex. And it's like, wait a second, I'm getting paid for something I'm not growing. How is that? And you explain that beautifully.
Yeah, it's I've toyed around with different ways of phrasing it, right? It's like somebody called it the fake acres or something like. It's almost I mean, not to be too sarcastic, but they're almost lobbyist acres, right? Because what it does is it's like if I lobby for the National Cotton Council, then those base acres and those payments, that's what I take back, not with the farmer. Because the other thing that's frustrating, right, is a farmer doesn't grow one crop. You're not just growing corn, you're probably at least growing corn and soybeans. And so these things divide up or segregate out the policy and payments in a way that doesn't connect to the reality. And so it's that diversion of acres, or those changing acres and rotations that this doesn't account for. And so it's a problem. And I think we're gonna have to reckon with this in the near future. Anyway, the base acre problem. The next one was back to crop insurance. Number 2 was the crop insurance problem. And this ties into the other two, because we've created these supplemental coverage option, these supplemental insurance policies, and they use the county. So if I buy insurance, I'm buying it usually on my farm or maybe a specific field or the entire farm, depending on how I set it up. And this is county level. And so here what we're seeing is a shift in insurance to where we're giving a very high subsidy rate. 80% of the cost of these policies is covered by subsidy, and we're triggering at 90%, which is a high level of insurance. And so when you put this at a county level, what we see and what our analysis is starting to show is that what it is doing is really providing extraordinarily generous insurance for the highest risk areas. And so then you go back before and you say, oh, that 120 that special bonus A&O subsidy now starts to make a little bit more sense, because now all of a sudden, if you got high losses, they don't want to sell here. Well, we'll give them a bonus subsidy to keep selling here, and this feeds. And what we're seeing is a shift again to crop insurance to really over-insure high risk areas and problematic areas, and puts at risk the integrity of the program. So that's a big challenge.
On that point, can you explain a little bit why, or what their rationale is for trying to insure those acres? Is there, I mean, what would be the reason for that?
So there's a couple answers to that. It's a damn good question. There's a couple answers to that, right? Obviously, if you're in a high risk area, you're suffering a lot of losses. And so this is, again, one of those things where it's sort of the unfortunate like painkiller analogy, right? You're in these areas, West Texas is too hot and dry, and so the cotton crop doesn't survive even with irrigation. Look, for the individual farmer, that's a problem, right? Like you got to make a mortgage, you got costs and so forth. And so there is a legitimate challenge and concern, like how do I keep farming if I don't have this? And so I get that, right? I understand, but I think the problem is, again, we're not helping you adjust to those realities. We're just paying money out to it. And that's where I think we get into some of these situations where some interest groups and people who lobby or go in and talk to Congress, like they're taking a legitimate and serious problem, but they're always coming back with the same solution, right? It's the old, if the only thing I have is a hammer, then everything's a nail. But the only thing they have are payments, and everything has to get a payment. And so what I think we're seeing is, rather than making or helping farmers make adjustments through policy, we're just saying, well, you keep doing it and we'll just keep paying you to keep doing it. And, you know, maybe it works somewhere. I don't know.
Yeah.
But it is, I do not want to ever sort of leave the impression that there aren't challenges, or there aren't problems here. And I do feel, I mean, I cannot imagine the challenges of farming where irrigation doesn't even work. Like that just boggles the mind, right? And we are in the Midwest. We've got great rain-fed, great weather, like relatively great weather, our climate, you know.
Hey.
Weather, maybe I shouldn't say weather, right? We have pretty good climate. Weather's a pain at times. So I can't imagine those challenges. But again, in terms of policy, the questions I have and that you're raised, like, but why keep doing this? Are we actually helping the farmers? I mean, we're certainly not helping the program, right? The program loses integrity, which puts it at risk for multiple things. But I even worry about farmers who are getting overinsured to do high risk production, and we're not making adjustments. So if it gets hotter and drier, we just pour more money into a dry situation. And then you add on to that, you're pulling up Ogallala water, the aquifer's running dry. So are we just pushing them off a cliff to where you're not going to have irrigation water? And what are we insuring, right? So that's where it's a challenge. And without having these kind of tough conversations, what ends up happening is somebody with a simple solution, jack up the premium subsidy and the coverage level for SEO, that'll take care of it. No, it won't. It'll pay money, and it'll create basically a direct payment program that masquerades as crop insurance, but it isn't fixing the problem. Where I had Lubbock County in Texas, where 10 out of 10 years you had loss ratios above 1.0. There are problems there, but we're not solving with this policy. Anyway, that's a good question. And maybe maybe when we're not fighting over SNAP, somebody has to answer those questions, because that would be a very interesting discussion to see talked about. And then my number one top of the top 5 worst changes of farm policy is also obscure and bizarre, and also runs a real risk of being mischaracterized, if not misinterpreted, if not full of misinformation and disinformation. So I got to walk through this a little bit, and you help me out here. So one of the things they tucked into this bill is this qualified pass-through entity provision. And what it does is it allows legal fictional entities, so limited liability companies, LLCs, S corporations, general partnerships, and so forth. What it does is it allows them to get more payment limits, more payments. Now, this is where we got to caveat this a bit, because the first thing people will say is, oh, we want farmers to do that. Like, you're limiting the way they manage, you're limiting their options. No. Most of this, first off, is state law, not federal law. And any farmer can form an LLC or an S corp. In fact, there are a lot of really good business reasons to look at these entity structures to manage your farm. That's separate. This provision doesn't have anything to do with that. You want to form an LLC in Iowa, you go to the Iowa Secretary of State, you form an LLC, it's a paperwork thing. Now you have the liability protection of the LLC, the pass-through tax treatment of the LLC, and you can form that up. That's not what this provision does. This is a payment limit loophole, is all this is. And why I think this is the worst change in policy is because of what it actually does. So what it lets somebody do is if they're big enough, they've got enough base acres and enough accountant lawyer time, you form up multiple LLCs and you actually tuck LLCs as members of LLCs and you have these embedded entities all the way as deep as you can do it. And what this provision does is allow each entity to get a payment limit within the overall entity. So in my little rough example, I could have an S corp that can get over $1 million in payments simply by using a couple LLCs in an embedded structure. It's obscure, it's bizarre. The end of the day, what this means is we are giving the largest operations a big loophole to get a whole lot more in payments. And my concern is, particularly given how difficult the times are, these are the farms operations that need the help the least, right? If you can set something up like this, you should be last in line for the payment. Not saying you maybe not get anything, but you should be the last entity to get a payment. This means we're going to pour cash into these operations, and we are. These operations are going to use this to buy up farmland, to run up cash rents, and run people out of farming. This is an accelerant for farm consolidation. This is like Earl Butts on steroids, get big or get out, right? This is the worst thing I think we have done in farm policy for quite some time. And I'm afraid we're going to regret this. I'm afraid a lot of young farmers are going to get chewed up and spit out by this because they're not going to have the entity structure. You need a large amount of base acres, particularly in the Midwest, to make this even work, because you got to be above payment limit levels, which are, by the way, $155,000. The other thing that ticks me off about this, if I can just throw a point on this legal fictional entity stuff drives me nuts. Because you know what? Farming has always sort of been family. Like we understand farming as family, right? Which is good and bad. Good and bad. But if I'm a farm family, the only way I add more payments is to add actual human beings. These fake legal entities just get to create more fake legal entities in a way that is like baffling. Like, why would we give them an advantage to do stuff like that, which does not exist for a family, right? This is not a family set up the same way. This is just adding fake legal entities to pull in more payments. And so to me, this is like giving the competitive advantage to AI or what are we doing here? And I fear this is going to drive a lot of people out of farming and really make a mess for us going forward. So anyway, that's my little bit of a rant on that one. This policy drives me bonkers, because I think we're just creating problems, and we're gonna see a lot of small towns, right? You're gonna lose farmers around the area. People aren't gonna come back and farm. You can't compete with this. If it's just you and your dad, or maybe you, your dad, and your brother, you can't compete with this. This is not fair game.
Jonathan, on that point,
yeah,
you've served on the Hill. You've been around the block. You've been around the block up there. How does something like this get into our farm policy? How does something? I mean, that's fairly. I mean, you drew it out really well here with this slide. I mean, my goodness, setting up, as somebody who's got their own farming LLC. I think that's not cheap to set something like that up, right? It's not just like you snap your fingers and away you go.
It's easier,
like you said, to set something like that up with all those different entity structures, my goodness, you have a team of people to do that. So how does something like that get into that? Honestly.
So the one thing, what this also does, similar to that A&O special subsidy, this is a sort of telltale of just how ridiculous the reference prices are for these crops, right? This matters where you have high payment rates on a lot of base acres. So that tells you right there who's bringing this to Congress, right? Large operations, large farm manager types, right, are going in and saying, well, it doesn't do me any good to get $300 a rice base if I can't you know, if I get stuck at $155,000. And I've actually been in conversations which, when I was on the Hill, which I would walk out of the room and maybe that's how I lost all my hair. I'd be like scratching my head coming out of it. Because in the same conversation, somebody would say, we can't survive without payments. We can't survive without payments. And then they would flip and say, and oh, by the way, you can't limit payments or we make too much money in an adjusted gross income standard. So we can't have those things. I was like, wait a minute. This is really an odd sort of juxtaposition that you make too much money here, but you need the payments to survive. And these payment limits are a problem. They're a problem for large, sophisticated operations. And that's who gets this provision in there, right? It's very telling about what this is. And it's very telling about this trend in farm policy, which is a self-feeding thing. Because then you have fewer farmers and you have more LLC entities doing this. They're the ones that go to the meetings. They're the ones that say this is a problem, and the policy just feeds on itself. In the same way, reference prices and crop insurance for high risk, right? It's a self-feeding thing because the policy is driving, it's reacting to the change, and it's driving that change further. And so it spirals from there. And that's why I think it gets in there. The other thing is, because using LLCs and entities isn't a legitimate farm management reason, right? It hides behind that because it's obscure and people don't necessarily understand that, somebody can run out and argue, oh, we're hurting farmers because they can't use LLCs. Well, that's not the problem. They can use LLCs. The problem is you can't form 16 of them and get, $5 million in payments. And so it uses that kind of obscurity. It uses that kind of misunderstanding about what goes on as a way for a couple of these big operations to push this policy through. It's bad. Like I don't know. I don't want to accuse anybody of doing, bad faith, but I don't know how you look at this and say this is a good idea. And that's when times are good. Now, when times are bad, this is going to be even more problematic. Sorry.
Hope you're good. What else we have on the slides here, Jonathan? I know you've got some other stuff on here as well.
Yeah, we get into history a little bit more. I got concerns that CRP wasn't reauthorized. That's a big issue, as important as that program is.
Go ahead and talk. Let's go ahead and talk about that. Let's talk about some CRP on there. I think that's important.
Yeah, CRP is kind of our buffer, if you will, right? We've got about 25 to 27 million acres in the CRP program. This program dates to 1985 Farm Bill, so the depths of the 80s farm crisis, which was also an erosion crisis. We always talk about the economic crisis. We don't talk enough about, we put millions of acres back under production in the 70s and early 80s, and those were highly eroding acres. In fact, you'll find reports in 1975, the state of Iowa experienced the worst soil erosion it had seen in over 50 years. So that takes you back to the 20s. And so CRP both buffers on the acreage side, so it keeps acres out of production and has this sort of supply tempering aspect. I wouldn't call it control, but you're buffering the supply side, and it gives supply issues. It's also an incredibly important conservation program, right? Those acres are typically environmentally challenging. They're highly erodible or they have other issues going on. And so putting them in conservation avoids those problems. A lot of CRP acres anymore are what we call continuous. And so instead of a whole field going into the program, it's just a grass waterway, or it's a filter strip or a buffer strip or a windbreak or those sort of things. So this is a really important program in good times. When we have this kind of uncertainty around the markets and prices and all of this, if these acres come out, they go right back into production and they're going to feed that. Because what we have seen in history time and time again is this oversupply feeding an oversupply problem. Because what happens? At the farm level, it makes the most sense for you to maximize production to pay the bills. You got to go all out, right? If the margins are tight, yeah, you should be cutting costs. Yeah, you should be working down cash rents and all of this. But can you do that in the competitive situation you're facing? Can you go to your landlord and tell them? Well, not if they see billions of dollars of payments, right? Don't tell me that a multinational company selling you products doesn't know what these payments are and figures, maybe my pricing structure can include my company's cut of that amount. I'm not going to buy that it doesn't influence it. So it's hard to change that on the individual level. When you have thousands upon thousands of farmers doing that on millions of acres, you get the cliff because everybody going gangbusters to make ends meet drives us off the cliff, and it makes the prices worse, it puts pressure on you. So this is a buffer. This keeps acres out of production. They didn't reauthorize it in the reconciliation farm bill. Maybe they do in this skinny thing farm bill that they're talking about. I don't know. But if we lose CRP, we've got millions of acres that could come back into production. Now, these are 10-year contracts, so that the contract can continue unless USDA lets people out of the contracts, which is also a possibility. But it begins to erode the program, and acres coming out of this, particularly in a tough market environment, are likely to go into production. And look, if it's set in CRP for 10 years, you may get good yields off of it for a few years on corn, for example. So this is one of those like break glass kind of things. If we start to see these acres roll back into production at the same time we've decimated markets, we got a problem. We have a real problem. And no amount of biofuels is going to be able to handle that much overproduction.
Jonathan, two things on the Conservation Reserve Program. Number one, not to go down a rabbit hole here, but obviously there's always when it comes to different programs that have been in place, it reminds you of like the soil bank program a little bit.
Yeah.
Those kind of things. What would be some of the reforms that you'd like to see done to CRP? Not to get down too much of a rabbit. I think it's just important. I've got you on here with this, and I'm like, there's so many questions I have.
Well,
you bring up
Josh,
CRP, I think this is one of them.
You opened the door to the rabbit hole because you said soil bank, and the soil bank is one of my favorites. It's like one of my favorite things in history because it had a CRP, it had a conservation reserve component, but it also had an acreage reserve component, which was an annual in and out. You could actually move acres in on an annual basis into conservation for that year and pull them out of production. Look, it was also part of the supply control mess of that era coming out of the New Deal. It has problems in its design. I'm not saying it was a perfect program, but it's a hell of an interesting idea. And I got to say this because I sit in Illinois. This idea came out of farmers in Illinois in the early 1950s. So just to give the soil bank its due, in 1953, these guys were proposing this idea because the acreage control system was causing a diversion of cotton acres, frankly, into corn and feed grains, which is hurting the corn and feed grain markets and spreading the problems. And so they said, why do that when you could divert this into conservation? And so it is an interesting concept that like the acres that are the most problematic, you set aside, you put into I just used the wrong term, put into a reserve for 10 years. But other acres you could move in and out. So to your question, what's one of the things I think could get really fascinating if we wanted to be creative and innovating is the CRP offers an opportunity to rethink part of it. I think you have to I think you have to sort of cabin off the general whole field enrollment and think about that a little bit separate. But I think what we've seen with this trend towards continuous acreage, you can do a working land CRP. I mean, this is a great program, right? It is a really simple design concept. You pay a rental rate per acre for doing something, which opens it to a whole host of things. So I've talked to different farmers and about ideas of like, could you rent acres for 6 months out of the year to put cover crops on it? Why not? It's a cover crop program, so you get 6 months of rent to do that. Can we bolster things like the continuous acreage provisions and so forth? One of the problems with CRP is it has an acreage cap. There's only 27 million acres that can go in, so that challenges it. But we've seen some of these trends, like I said, continuous grasslands, where we could maybe use this to help rebuild cattle herds if we wanted to, and not have acres go into corn production when they could go into grass production and possibly help with grazing. So to me, there's a lot of potential in this program, both from what we see from things like the soil bank to thinking about a working lands component of this that got that really help farmers. And then you can even look at this and say, if you're a young farmer, like we have this transition incentives program in there, maybe we could expand on that and think about how we transition land to young farmers or help young farmers more. You can design those rental payments any way you want. So to me, when I sort of nerd out on like, what could we do? What could we do? Well, I think we'd go back and we'd tear apart the soil bank and look at that real close again, find out what went wrong, where were the problems, what were the design features that were most problematic, and come back and look at CRP and say, okay, how can we use this for a working lands component while also bolstering that reserve aspect? Because there are acres that are too erodible. Again, we talked about the problems with high insurance. Like if we have high loss areas and acres, can we use CRP to transition those acres? Can we use CRP to help the farmer, but not just pay money for losses at all times? And so I do think there's interactions with crop insurance that get really fascinating if we were to take time to think it through. We're in this situation with Brazil and China where we've given away much of the Chinese market to Brazilian soybean farmers. It doesn't make sense for us to then maximize soybean acres, right? Can this help? Can we look at areas where the soybean losses are higher than other areas? Can we prioritize this? Can we use the CRP to help break up 2 crop rotations and get wheat or other cereal grains? Like, because it's such a simple concept where you're just paying a rental payment that you can tailor that rental any way you want, this program has a massive amount of flexibility and a lot of potential if we wanted to get creative and we wanted to, I'm going to use it again, if we wanted to set aside our kind of historic barriers to this, right? We joked about it before we started recording that like I often feel like it's you say something like this and you can almost see the wheels turn. It's like, oh, Grandpa hated that program, right? Like, oh God, it's a set aside program. And all I heard was Grandpa complain about that for years. And, it's like that, it blocks us from being more creative with it because we just have this built-in sort of opposition to it. If we could set that opposition aside and get creative, this program offers a lot of opportunity.
I think that's, to your point of having flexibility within the program, I think would be, helpful. The one criticism that, hear constantly, I'd love to have your answer to this is, it takes acres out of production that could be used for people with, that are looking to get into farming. I mean, we know that the land is one component, but I'd just like to hear your response to that one.
No, I'm not saying that this is a perfect program. In fact, if you ever find a perfect program, then I really quit. I give up. Like if that ever happens, there's no point, right? There's a lot of problems. Like we've seen problems in Iowa in particular a few years ago with pollinator that was paying above market rent, paying really high rents, which competed. And to your point, one of the things we have to look at is what happens if this takes land that could otherwise go to a young farmer. Definitely those are issues. But again, that's in the design. That can be dealt with.
Right.
And in particular, if you're using a working lands concept, you don't necessarily have that same problem because that young farmer would benefit from a grass waterway that prevents erosion or prevents those gully things, right? Like driving a tractor, nearly take the front tire off of them, right? When they really have that washout. And so this can help. And the problem historically has always been the whole field. When you take whole fields out of production and put them in a contract for 10 years, then there isn't a lot of flexibility. If we put flexibility in the program and allow it to help farmers adapt and adopt to change and adjust to the problems, I think it becomes very useful in that sense. But I do not want to just pretend away that there aren't issues with this or that there may not be issues with this, right? This could cause problems, too many acres in a county, right? We have a 25% max per county to avoid too many acres coming out of production in any one area. Again, that is a bit of an anachronism. That's a bit of a throwback to issues that happened in the past. And it certainly doesn't apply to the continuous side of things because those acres stay in production. What we're doing actually is making the land more productive over time and overall because you're dealing with problems on the land. Another interesting concept that Senator John Thune from South Dakota has been the big champion of is called SHIP, the Soil Health Incentives Pilot Program. And that's more Iowa, South Dakota, and the Prairie Pothole region. But the idea is brilliant. I mean, I've looked at this for years, just thinking, oh, I wish we were doing more of this, because it allows a much more flexible 2-year, 3-year kind of usage of the program. I think you can start with something like SHIP and really think about how this could work for working lands and cover some of the issues. But you want to be careful, right? You'd want to think about not disincentivizing new farmers getting leases or whatever it might be. And you don't want it competing. You certainly don't want it driving up cash rents in any area, not right now. But those are risks if the design doesn't cover it. And here I come back to sort of like getting innovative and creative about this is critical. Discussing these in a good faith, sort of butting heads over some of this stuff and coming back with new ideas and, frankly, running models and making projections and trying to see. This is where nerds in academia should be doing, I think, is running out scenarios and say, oh, what if we tweaked this part of the policy? What do we think it would do? This could be a problem, and try to feed that back into how we're designing it. And then ultimately, right, future Congresses can always revisit these programs.
Well, I think
that was a long answer to
no, I think that's where it's really important. Your voice, as I've told you before, and I'm not the only one to say this, is extremely important, because to be able to think through these issues, right? To not just say, well, dollars have to be increased in a certain area and that solves our problem. It's like, no, that just, and the other thing is, for a relatively small amount of tax dollars and what this does for the nation at large, serving our topsoil, which is, an extremely important asset that the country has. And what I'm hearing with not only the SHIP program, conservation reserve program, they're important tools in the toolbox. And if they're designed properly, they can have for a really small amount of dollars, Jonathan, it can have a really big bang for their buck and help solve some of these really overarching problems that we are facing. And, you do see the payments that have been, ECAP, alphabet soup is what they are now. Though what those dollars could be used if they were put into a SHIP program, a pilot program, or like, hey, what can we do with a couple extra dollars that goes into conservation reserve? And if we have somebody that, like yourself, that has the experience of saying, hey, these are what the things that we're finding at the university level at our land grant institutions. My goodness, that does give me a little bit of hope, because I'm just like, man, this would be really cool to see how this would work and make our rural communities thrive, help those that are wanting to try to get into agriculture, which is a thing that I'm always constantly thinking about as somebody in their mid-30s that is looked at as a young farmer, right?
Yeah. I mean, just imagine, Josh, we spent $60 billion on reference prices. What could you have done in a working land CRP with $60 billion? A lot. And in the grand scheme of the federal budget, that's not a lot of money. I know that's a lot of money in reality, but like in a $6 trillion federal budget, it's not the biggest way. So I agree with you. It could be a really invaluable investment. By the way, those whole fields, you often see places like where pheasant hunting, pheasants move back in Iowa and the Dakotas, right? And that means people are traveling to those areas and they're staying in hotels and they're eating at restaurants, and hey, maybe they go out and have a beer afterwards, right? And it's like you're helping the community in that sense too. So I don't want to leave the impression that even the whole field has problems. It depends on where. And this takes me, if this takes me to like my high level sort of ideal, that I think the base acre question to this really comes back to, and I worry that our policy has drifted away from the land too much. And then if we start thinking about land-based policies and how it looks on the land and what it means on the land, that might help us think our policies through better than, oh, do I add money to my seed cotton baseline, or do I like this acronym, so let's put more money there. What's the impact on the land? What's this look like on the land? Think of land-based policy, CRP comes to mind, and then get creative around that.
Well, like I was saying earlier, like the nation's greatest asset is, I think about, of course, here in Iowa, my goodness, is our topsoil.
Oh man.
You in Illinois, the same thing, right? All through the corn.
Some of us might argue that Illinois has better topsoil, but that'll just get me in trouble.
Oh, Lord have mercy, Jonathan. Here we go.
But you're
Yeah,
right.
anybody that knows me, I have more Iowa pride to my own detriment.
I know. I'm just trying to pick on you.
I love
don't,
that. I love it.
but it is true. Our soils, I don't know how much you get to talk. Like I'm a kid in a candy store being on campus, right? Like I go talk to soil scientists and it's amazing when they talk about like really just dedicated to understanding soil. And they tell you like the all this stuff, this living aspect of soil and how these things change and but like soils are amazing, absolutely amazing. And the fact that we don't value it enough is really a problem. And it leads to other problems, right? Soil running off fields is a loss to the farmers, a loss to that field. It's getting in the waterways, or it's a dust problem. So it hurts other people. There's no value. Losing soil, there is no benefit to losing soil, right? There's no upside. And so I agree with you. I think it's a resource that, again, thinking from a land-based, soil-based policy would probably help us improve policy drastically.
I have not heard anybody necessarily put it in those words like you just said, but focusing on the land, and that is an asset not only to all of our rural communities but the nation as a whole.
Yeah.
Yeah, I think that if you one of the old adages, right? You begin with the end in mind and you work back from there.
Yeah.
That allows all that flexibility within all these different programs that we have to try to, combat some of these problems that we're facing.
It could make for some interesting policy discussions. And
the fun thing of getting innovative with that. I mean, I almost want to say, not that you need to leave the University of Illinois and get back out in DC, but some of these innovative ideas that policymakers, they need to hear. I mean, it's not just throw more dollars at the problem. Like
you're working on that.
Yeah,
right?
That's when it comes to policy. Well, that's one of the things in my life that I advocate for. It's the love of my farmers and my rural communities, and all that, and want to see them be successful. And then you, like I said, you do see of course, there's some self-interest in there. We're in the business of agriculture, and
there always is.
But I see our topsoil. That's our greatest asset that we have, and how do we protect that? Just on a micro farm basis, and then of course the policies that come out of Washington or Des Moines or any other state capital that influence that. So and influence the decisions we're making on a farm-based level.
Yeah, and I would say, I mean, you and I are maybe oddballs, but I do think it's more fun.
I'm definitely in that camp.
I know, I'm there too. I think it's got to be more fun to think creatively on new stuff than just come back and say, give me more of that. Oh, I just do more of that, right? I feel like these reference price discussions are in such a rut. It's like we've gone 50 years with the same policy idea, and the most we can come up with is raise them. That was like the late 70s. What was the policy solution? Oh, increase target prices. 80s. What was the policy? Increase target prices. 2002, increase target price, right? Like that's just, I don't know, that's boring. There's no innovation there. There's no creativity there. So I agree with you. I think maybe to your point, part of our problem is we get stuck in all the details. So let's step back. If people were to say, okay, what I want to see is a land-based policy. I want to see policy that puts the land as the priority. Tell me how this prioritizes land. Tell me the implications on the land. Then maybe we can clear some of this stuff out and get some of these acronyms and things out of the way and have a driving principle for our policy that benefits not just farmers, but farmers and rural communities. All of us got to eat. We can use that as a driving priority or principle. Maybe maybe we're wrong. I don't know, but it seems like it would at least be a more interesting conversation than, oh, I need $580 a ton for peanuts, and I need $18 a hundredweight for rice. Like, what is this? That is not a conversation of policy. That is a barter exchange or something. That's just a take.
Well, we understand, I know we've got other slides that you've got on here. Is there anything else you wanted to point out on this, Jonathan, before I get into questions?
No. I mean, I want to make sure I'm not driving all of your listeners away and making this horrible. I didn't even get to history. I mean, we touched a little bit on history. The only other thing I would point out back to the death of the Farm Bill is that coalition. And again, this is where I think our history, what we tend to see is recycling, not repeating in history. We see things recycle, and I'm afraid we're seeing that now. And it's what we got to this point. I told you, 1962 was that Farm Bill, the first time the Farm Bill got beat on the House floor. There's two key elements of that in history. Then I'll stop being a history nerd for a little bit, unless you got specific questions. Two key elements. 1962, Farm Bill is defeated on the House floor. And then making it worse, the wheat referendum in 63, the wheat farmers rejected what they eventually got through Congress. And in any political calculation, that's the policy. Like all the farm policy should be a history lesson that ends in 1963. Why isn't it? Because in 1964, they cut a deal to pass the Food Stamp Act of 64. And then they got the Southern cotton folks in Congress who were fighting food stamps and causing policy problems. They cut a deal and said, if you vote for food stamps, the rest of us will vote for the cotton program and we can move forward. So food stamps literally saved farm policy from self-destruction in 1964 because it had self-destructed with 62 and 63. So when we say we've killed this thing, there's a big history. There's a lot of baggage to that. Food stamps saved us in 64, brought it back to political relevance or political viability. The other side of that is how we got to the defeat in 62. And that is the story of the 1950s. It's the story of the soil bank, because coming out of World War II, we kept doing these high loan rates, kind of like reference prices. We had these acreage allotments to try to control production and say you can only plant so much, but at the same time, we were having a technological revolution. So you're boosting yields per acre, which means you either have to cut a whole lot of acres out, which are not going to leave people happy, and cause other problems. So this thing unraveled in the 50s, and it unraveled because of this combination of bad policy, not adapting to the changes on the ground and the changes in the technology sector. And what the policy started really doing in the mid 50s was we'd cut cotton acres, you cut wheat acres, and those acres would divert into corn and feed grains, because that was the big market. We had a huge domestic feed market. 80% of our corn went to feeding animals. And so when those acres started shifting, you spread the problem from cotton and wheat surpluses to make feed grain surpluses, which tanks the feed grain market and hurts the Midwestern farmers. What's the solution? Tell Midwestern farmers to plant less corn. Now imagine that conversation. We say we've subsidized cotton farmers to plant more corn, but because that's created a problem, now corn farmers have to plant less corn. What? Right? I mean, that's just, and again, land-based priorities would have made you think about that. Instead, we just doubled down, tripled down. And so by the late 50s, the Southerners killed the soil bank. So the soil bank was a Midwestern option to say, instead of diverting into corn, divert to conservation, and we'll pay for the conservation and the acres. That was opposed in the South. And so Jamie Whitten, who was Mississippi congressman for 50 some years, and he was real all powerful in the Appropriations Committee, led an effort to basically kill the soil bank. That happens. Now the corn farm, the corn guys are mad. And so in 58, they vote themselves out of a program, and it fights and fights. And then by 62, the whole thing had unraveled. And so we see this happen. And what is the driving force of unraveling? This problem of an acreage shift, this problem of spreading surplus problems to other commodities and using policy to do it. And that to me sounds like what we might be seeing with base acres in its own way. That if I can get $150 an acre to plant corn on a base acre, then I'm going to do it, because I see an RFS, I see a biofuels market that may be better than an export market. And when we start doing that, it's spreading that problem. And I fear for land values and farmer bottom lines if we swamp the corn market with way too much production. So anyway, that's my last bit on history and so forth. But
we're going to have we're definitely going to have a part 2 in this, Jonathan. That's going to happen. Because I've got about 70 different questions.
You better see
maybe 70 different questions with what you just went over.
You better see what kind of response you get from this one. You may not ever want to do that again.
Oh my God!
You want to do a history? You want to do a history discussion, man? I could spend a lot of brain time talking about his, because it fascinates me to know it.
We'll plan on doing that on a podcast episode for everybody. That we'll do a history with Jonathan of the Farm Bill, because I think it's so informative, and it helps. It's the mirror, as you know, as a historian, they always taught us, right? The only, your mirror is the only thing you have to go into the future, because that's what you've done in the past. So you can kind of it gives you a roadmap.
Yeah.
So I think this is.
But you don't want to drive with a mirror, right?
No, yeah, here we are. This is a great slide that you have up here. Where is this all headed here? The one thing that we can end on today,
Yeah,
is you signed with a bunch of other very prominent people in agriculture a letter recently about the potential. If I remember right, Jonathan, there was a potential collapse of our agricultural system as we know it, in a way. Can you talk a little bit about that, and then we can get into where you think we need to go to help us all out?
Yeah. So that letter, and it's sort of that. It's a warning signal, right? I think people should take it as like everybody on that letter cares a lot, right? Really concerned about what we see. And many of them have worked in this for decades. And so some of them have been through many of them have been through the 80s, right? And so I think it's a disservice if it's not taken seriously. And maybe, there's individual pieces here or there. I don't necessarily, not all the policy solutions maybe are the greatest ideas. I think the primary thing to take away is here's a group of individuals. I was happy to join it. I don't want to take any real credit. I sort of, I was flattered when they said, and I'm like, yes, I'm concerned. Whether I'd have issues with one word or this phrase or that phrase, the end of the day, to me, it said the more people that can stand up and say, we are concerned and we are not fixing issues, we may be making them worse. That is the first step in having this conversation be productive. If everybody just sort of, goes along and buries what they're concerned about, then we don't, we go over a cliff in the fog here. So I really have a lot of respect for the folks in that letter. I have a lot of respect for the work that went into it, the discussions, and the willingness to step out and say, we are concerned and we care about this. So that's the main thing. I don't know where it leads. It's a tough time. I think we have to just acknowledge that we are not in an ideal policy making or political situation. And these things are changing fast. So that's the main thing. I think it's one of those, warning sirens. And I don't want to, there's always a risk, right? There's always a risk that you don't want to be crying wolf. You don't want to, and so I know a lot of deliberation went into it. I know a lot of thinking, like this isn't, it's not a panic button, and I don't think it's any kind of crying wolf. I think it's just, we've seen some of these issues before. It's kind of a wake up call. Okay, here are some respected people. Here are some people who worked on this stuff a long time. They're concerned. Can we take a step back? My first thing would be, before the next round of payments go out, can we stop and think this through and think about the land implications, the implications on costs, the implications on young farmers? Like, can we do that before we just issue another bridge payment? Because I am worried that everybody understands there's a problem, and it's just real easy to roll into the Secretary's office and say, hey, do another bridge, or go into Congress and say, well, they did 12 billion, you should do 15 billion. So if nothing else, I hope that letter puts the brakes on just making things worse with policy, but I don't know, I'm that optimistic.
Well, here, if you had, I like to say three things, but if there's one or two or whatever the number is, because we are, talk to people every day. It's the situation currently on the countryside is really, really not good. An exception if you've been in the business of a cow-calf operator, and of course that has not been good forever.
You're on the upside right now.
So I'm like, you know, and of course, people, you know, talking about Argentinian beef and what that did to the cattle market for a time there, that was upsetting to me and a lot of others. That's a whole nother discussion, Jonathan. But
Oh,
you know, like I mean, like I said, it is not good out on the countryside. So like the payments, you're sitting there going, okay, well, it's something to keep head above water until we can have a more serious discussion, like you've talked about. That's where I always get, you know, I'm like, I don't like the ad hoc payments any more than the next person, because it's like, well, what is it? How much is it going to be? When is it going to be?
Yeah.
You know, and then of course people are trying to get lines of credit, you know, and then, well, the payments are coming and the bankers are saying, well, we don't know when they're coming. So like, how can we make a loan on a guarantee we don't know exists? So like, I kind of go back to what I started with in the beginning of this conversation, was like, we're just looking for some stability. Like what if, okay, let's say we can muster the storm here somehow, or weather the storm here somehow with another tranche of a couple of FBA payments and maybe another one. How do we get off how do we get off that treadmill?
I don't know. And every payment we make makes it harder to get off that treadmill, right? One of the things we don't factor in enough is how much these things are self-perpetuating or self-feeding. And so again, if the payment goes through and the costs stay high, all the problems you mentioned, landlord to banker, right? And so it's the easy button to throw out, and I guess just do another payment. So I worry. That's why I think, and I feel I had a young farmer pull me aside in a meeting the other day, and he's like, I hear you, but that payment's what's keeping that got me above the waterline, and I'm just, I don't have a good answer for that, because you're right. Like on the individual level, these things. So I would like us to pause on that, right? And think, are there other options? Are there other ways? Is it a line of credit system? Is it a CRP? What else could we be using, rather than just throwing money out the door at the problem and not fixing the problem? Look, the market situation, Brazil, China, soybeans, like that's a long-term, like we may never see the level of soybean exports to China that we saw back before 2018. More importantly, and more problematically, it's just a geopolitical game now. So Xi says one thing and they either buy or don't buy. That is no certainty in the market. President Trump goes from tariffs to no tariffs, or ups and downs and this and that, right? There's no certainty in that market. So that's a long-term problem. We're not going to fix that with payments, but we're also got to, as the guy told me, it was like, look, it doesn't matter to me if I'm not farming next year.
Right.
And I hear that, and that is, man, those are real struggles and real challenges. And so I get the reason why. I also get that it's real hard to say no to the payment, or say no to the money, or to be against. Like, that's not fair to a farmer. It's not fair to you. You're the guy that's got to stand up and say, oh, I won't take the payment. This has to start in DC. The folks that are leading in agriculture in DC, which again comes back to that letter, that's a group of people that have had roles in those. That's where it has to start. Don't make promises on payments. Don't keep doing the thing that's not helping. Stop, you're in a hole, stop digging. So stop digging out there in DC and get to thinking about, what is it we can do? How can we help, not just throw payments at it? And I would like to be an optimist, but I'm not. I'm pretty certain we're just going to see more payments. And a lot of what we're doing is, papering the record for the next historian to write, here's what happened in the 2020s. And that breaks my heart, because farmers that went out in the 80s, man, families going like that, they don't come back, right? You don't go out 10 years and come back. And that is a loss. That is a loss for communities, for society. And it drives me crazy. I don't know. I don't know what the answer is, but I do know we're not getting closer to it with what we're doing.
Well, the residents of the 80s, I mean, that reverberates to this day. I mean,
Yeah.
my grandfather, just passed away a couple of years ago. I mean, that was conversations we had about that all the time. And he was like, man, I was lucky to keep what I had.
Yeah.
One of the lucky ones that didn't go belly up. And of course we know, Jonathan, the 1980s farm crisis was a complete and abject failure of farm policy
Yeah.
that led to people not being able to keep a farming legacy. Because that's the other thing. It's not just dollars and cents in a business. I mean, it's a legacy that
Yeah.
passed down, and what that does to a family's identity. Not only that, but a community's identity too.
Yeah. And you know what's infuriating about it was how the policies from the 70s fed into that, right? I mean, we know that like the break point was raising interest rates in 79 and the Soviet, the ban on exports, Soviet Union after Afghanistan. Like we know those kind of like pushed it over the edge. But we got to that edge in the 70s. We got to that edge because in 1972 and 73, policymakers, leaders in DC, like former Secretary Earl Butz, weren't just saying fence row to fence row, get big and get out, right? They were saying it was a promised land, and they were pushing policy. The 1973 Farm Bill's target prices were written in statute as production incentives. The goal in the policy was to bring acres back in and put these incentives to produce. And what was the justification? Export markets. In 1995 and 96, we go to base acre decoupled program payments. What's the justification? Export markets. Export markets are important, but if that is the only thing we see and we adjust policy for an expectation in an export market, we've multiple examples of that being a problem. And the 80s is infuriating because federal policy drove us to that point. Interest rates may have kicked it over the edge, but we got to that edge with the 73 Act and this inability to get out of that system once we got into it. And, you know, it's stuff like this that, like, when we put the problem on the individual, whether that is, you know, it's the individual farmer's fault for soil erosion or nutrient loss or pesticide issues, when we put the problem on the individual and let others off the hook, we just create real tragedy at the individual level and bad policy across the board. And so, again, if a warning, a wake-up call can help us stop and think and work on this, it's worth a hell of a lot more than the paper, right, that we wrote it on.
Yeah.
But it is a tough issue. And those 80s are, you're right, it was scarring. I mean, my grandpa never stopped, but my dad, and this is the other thing that worries me, like a lot of the farmers that survived the 80s, I'm worried they're the last of their kind, right? My dad's retired. He farmed for 50 years, starting in, you know, coming out of college in 72. That means he survived all that. But my brother isn't, right? And so, you know, this last of their kind of thing, like these are the guys that went through it. Who's following them? It's probably LLC entities that are buying this stuff up, and, you know, then what? We don't get that back. And so I don't want to over dramatize this but it concerns me to no end.
To me, I'm hearing you say, though, the silver lining in all of this is we do have the levers within policy to make it better. That's there. It's not like, hey, we just throw our hands up like there's no answer. Like there's answers within the policy realm to make farm consolidation not go, you know, through the roof like it is, right? There's levers.
The tools are there. The tools are there. The question is, do we have the political will? Are we willing to be creative? Are we willing to work these things through? Or, you know, are we going to separate off into our camps and beat each other over the head until somebody's not there and another person has a pile of money? Because that's where we're headed is concentration of payments, concentration of acres, right? And so anyway, you know, again, as history nerds, We've got the tools and we have history. We have an enormous amount of 9 decades of experience here. So we have a lot to work with. We don't have an excuse. That much I'll go to the end of my time with, we don't have an excuse. That's the one thing we don't have.
Jonathan, this has been awesome. We will do this again. I can't tell you how much I appreciate your time today, expertise, and just your voice. It's really important, especially in this. It is not a good time in agriculture. I mean, it's like we said, we're not sugarcoating it. It is not good.
No. And listen, man, I appreciate the conversation. I'm sorry for ranting and raving as much as I did. Maybe you got a good editor that can make me sound coherent and wise, or at least not.
This is all raw right here. Everything we're doing is all recorded, and it's published. That's what makes this fun.
Yeah. No, thanks for having me on. And honestly, thanks for doing it. I mean, you've been very complimentary to me as a voice. You as a voice, and like working on this and putting this amount of time into it and having these conversations, I'm flattered to be a part of it. I really appreciate it. And I applaud you for doing it. I think it's incredibly important for voices like yours to be in this conversation and to be pushing and prodding and asking. And so keep it up, man. Keep working on it. And say when. I'm happy to come back on anytime you want. Anytime you want to bore your audience, drive away listeners, you let me know. You feel like you got too many people listening, you let me know.
No, we're looking forward to the next conversation for sure, Jonathan. We're going to sign off for now, everybody. This is Josh Mancy with Corn Belt Newsletter Podcast, and we'll see you next time.